want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Jerome Heisinger, manager of the JP Morgan Overseas Investment Trust. Hello, Jerome.
Good morning, Emma.
So your trust is a really good example of why investors don't necessarily have to choose emerging market equities in order to get exposure to this great growing emerging market story, isn't it? I mean, how many exactly emerging market equities do you have in the trust?
Well, you're absolutely right. So I can pick from a universe of over 2,000 stocks. I hold around 80 stocks in the portfolio. 8 of those are direct emerging markets, but I reckon that over 35 have indirect but significant emerging market exposure.
I think that's something that investors don't realise. In the FTSE itself, 70% of the revenues in FTSE 100 come from overseas. A broad proportion of those come from the wide emerging markets. And it means that you can get the corporate governance and the stability and the shareholder governance that you expect from a developed market equity, but with the growth from emerging markets.
You're absolutely right, and I find that very reassuring. But more importantly for me, because valuation is a vital prerequisite, is that many of the names I see in developed markets are relatively cheap.
And have you got a couple of stock examples for us?
Oh, absolutely, I've got loads. Henkel, they reported earlier this week. It's a German company. Activities across various industries, but in particular adhesives, where they're fast consolidating a very interesting global market. 45% of Henkel is emerging markets. Earlier this week, they announced growth of 6.5% revenues in emerging markets. Now, that is way above what you would get in developed markets, particularly in Europe.
And what about another one, perhaps from the US?
In the US, there's a couple of names. PACCAR, which is a truck company. They're active in Europe and the US, but they're just opening up a factory in Brazil. It's not necessarily the right time to be doing so, but we determine our valuation signals very much on what we believe is achievable normalized, and certainly that new factory in Brazil will make a very important contribution to PACCAR in a normalized year. But even Japanese companies, Daikin, for example, which is a world-leading air conditioning company, 30% of their exposure is in China. It's growing at 15% plus. Margins exceed those of the group average. And as you said, I have a meeting, or my colleagues have a meeting with Daikin on a quarterly basis. We talk about the financials. We're confident about the discipline of the investment they're making. And that's all really good. And it's cheap.
Jerome, thank you very much. This is Emma Wall for Morningstar. Thank you for watching.